The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 17th, terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that, what is simply tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call Leave No Stone Unturned. You know, leave no stone unturned suggests going to great lengths and efforts to achieve a worthwhile goal. And the virtue needed, that virtue is diligence. Miguel Cervantes once said that diligence is the mother of good fortune. Good examples surround us, whether they be explorers, inventors, scientists, or artists. Noah Webster spent 25 years compiling the first dictionary for the English language. Robert E. Peary, he tried for 23 years, and then finally he reached the North Pole. He did that in the early 1900s. Irving Berlin, he sold his first song for 23 cents. The time is now, folks, to expand yourself. Opportunities surround you. Leave no stone unturned. Expand yourself by doing more, giving more, and always expand your thinking. Mother Teresa, she once said, to keep a lamp burning, we have to keep putting oil in it. Well, next Friday, September 27th, is an opportunity for me to put oil into your lamp by doing more, by giving more, and by expanding your thinking. I'll be sharing with you strategies that produce extraordinary results in my online Master Trader Workshop, The Ultimate Money Machine. I will leave no stone unturned. And this is going to be my finest work. When you sign up for the workshop, you also get 1 month free subscription to my newsletter service, Mastering Probability. And you know what, folks? You can use Tiger Dollars, and if you don't have Tiger Dollars, well, you can buy them. Just call Leanna at the TFNN office, and she can walk you through all of that entire process. The amortized cost of the class, folks, well, during your trading life, it's what we'll call pennies. But those are pennies that will turn into a fortune. Yes, folks, leave no stone unturned. Let's go check out the stones in the marketplace here. Right now, you've got the Dow stones they're up 15 points, trading out at 15,546. The ES Mini Stones, they're up a point right now. NASDAQ futures, that's up 7.5 stones. The Russell 2000 up 1. King Dollar back about 13 ticks. Currency market here, really relatively stable as we speak right now. The hard currency market, well, you got gold is trading off $2.60 at $13.15. Silver off 11 pennies at $21.89. Ooh, that squishy, light, sweet crude stuff, that's back 83 cents. We'll take a look at that stock chart. Off about 0.8% this morning, trading out at 105.76. Natural gas, that's on the rise. That looks pretty nice. That stock chart actually broke out yesterday above an area of resistance. Old resistance becomes what? That's right. That should become new support out there. Platinum off about $6. A quick peek around the globe. Let's see what we can find. Well, it looks to me like a sea of red out here. The Nikkei was off 93 points as they came back to their trading session off about 0.6%. The Hang Seng was off 72 points, down 0.3%. The Shanghai, though, down 2% last night, off 48 points. Over in Europe this morning, relatively flat. Well, the DAX is off 10 points. The FTSE down 30. The FTSE is going to test that little price channel, the descending price channel that it broke out of yesterday. It's going to test that today. We'll see if it is going to get back inside it. Our call number, 877-927-6648. If you give us a call, we can most certainly take a look at your stock chart. Would love to do that. Let's start off by, what should we start? Well, you know what? Let's go start off by taking a look at light sweet crude. Then we'll come back and take a look at the actual indices. We'll take a look at the futures. Probably start off by taking a look at the daily charts out here. But let's go take a look at light sweet crude, see what it is doing right now. So we take a look at light sweet crude. Back here, folks, back to the 50-day exponential moving average. That's this blue squiggly line right here. You can see that the last time down, which was on September the 3rd, that level held. Don't know if that's going to take place. Right now, it should hold. It's trading right up against that level. It's neither overbought nor oversold. I mean, light sweet crude, if we take a look at that little kind of center-ish bottom area, the red squiggly line here on my screen, we know that light sweet crude has been traveling in nothing more than a sideways consolidation. Where's your best trade setup? Well, your best trade setup would be right about the 102.50-ish type level. Let me see here. The low that we had back on August 8th was 102.22. So if that area, if you get price that can push down there, and I don't know that it will, and we're going to be paying attention to this today because this 50-day exponential moving average line has held out there. I'm not saying go long light sweet crude, the better trade setup, because you're really right in the middle of this consolidation range, but the better trade setup is in that 102.50-ish type range out there. We'll just continue to pay attention to it. As long as we're over here in this section, let's go take a look at Goldilocks and silver. Not a lot of movement out here. Again, we've got if we take a look at this gold chart, if you are watching us on TigerTV, thanks so much for doing that. Maybe you're listening on your radio or your mobile device at TFNN.mobi. Don't forget, you can catch the live stream of the show, and you can do that by just simply going over to the homepage at TFNN.com with your smartphone. Over on the upper right-hand side, you'll see a button, 3 little devices there. Click on that. This show will stream live to you. You can see the nice 1.618 expansion of a set of swing points. That's your August 22nd low to the high on August 28th. And then we've got a 618 and a 0.786 retracement. That says that 1302.70 is a good support level. But we've got really no bullish candles out here. So to me, this is not really a long trade. No confirmation. Of course, if you're trying to buy a bottom tick, well then, God bless you and good luck to you. I would rather just get the meat of the hamburger versus trying to get the very bottom tick on a buy and the selling the very top tick out here. So right now, this actually is a chart that says, caution, Will Robinson. If we take a look at silver, hi-ho silver out here, really we're going to look at the same setup out there. No bullish candle whatsoever inside this chart. In fact, if there was any opportunity for a bullish candle, might have been on September 13th, but no, it's not there. This says that what silver wants to do, pull back to 2083, but more likely the 1969-ish level. That would set up a heck of a nice trade because that would take you right into that swing point from June 28th out there, right around the 1963 level. We'll see if hi-ho silver will go ahead and pull back there. If we take a look at the 30-year Treasury Treasury as long as we're over here. Yesterday looked like we were going to get that buy signal, but no, we didn't. We most certainly did not. So today, trying to give us that. To me, the buy signal inside of the 30-year Treasury is a close above 130.02. You are trading right now at 130.10 out there, but we still have time left in the trading session. So far right now, nothing more than really just working out. Now, and it really should have bounced out of here, and it hasn't. It's just simply working off an oversold condition by moving sideways. Talk about moving sideways here. Well, let's go take a look at the ES Mini because that's all that she has done here overnight. Just simply move sideways. You can see coming in. If we're taking a look at a 30-minute chart here, here's our nice gap up that we saw coming in on Sunday evening. The low, now with the gap, we're going to take a look at the gap, the expansion of this gap here. We're either looking at the low of Sunday's candle or the high of Friday's candle, or the close of Friday, I should say, at this stage here. The low of Sunday is at 1692. You're traveling at 1692 right now, but all that really took place here, take a look. We had the 30-minute move into an extreme, what I'll call an extreme oversold condition, and it did that coming right into that 3 o'clock, 3:30 time frame here, and all that it's done, all that the ES Mini has done on a big day when the market gapped up yesterday, all that it did overnight is just simply went to rest. It went to sleep to work off that full condition out here. To me, that says, Now, actually, I don't, I can tell you because we basically are closed out of our trades inside the newsletter. We've got one trade that is open, but that's a real long-term option trade that we have out there. So, and I can tell you right now, we're flat. This market, as I can find enough signals here to say that what the market is going to do when Uncle Ben comes out and greets it tomorrow, I'm not talking about the first impulse, but I'm talking about the impulses that follow. I can find enough reasons here to tell you that the market is not going to respond well to what Uncle Ben is saying. That's what it at least is giving us. Those are the signals right here, right now. That doesn't mean that I'm short. But I can also tell you one thing. I am also not long right now. There's enough signals out there that say, buyer beware. So no matter what it is you think about QE and Uncle Ben, I can tell you the signals out there. They are saying, caution, Will Robinson. Actually, they're saying, caution, Stevie's son out there. And I'm saying caution to each of you folks. So this is not a bullish thing here where the market gaps up. Doesn't mean that it can't move higher, but I can tell you it's not a bullish thing when a market gaps up like that, and the way that it works off that oversold condition here is just by sitting on the sofa. That's a procrastination or a procrastinator out there, and that's what the markets are showing. If we go take a look at the daily charts for the futures contract, if we take a look at this, let's start off with what has been the the top dog inside the market, and that's the NASDAQ futures. Take a look at this. This is a beautiful chart, really. If you take a look at the rising price channel, that price has been traveling. This is coming all the way back to the November 16th low. Take a look at yesterday. It gets up and over that area. It gaps up. It opens right on the rising price channel. How does it do that? And then guess what, folks? It creates a bearish engulfing candle at the top of a rising price channel. Now, support is down below. It hasn't broken through support, but boy, folks, that's not a bullish-looking candle configuration to me. I don't know about to you. 877-927-6648. We'll be right back.
Yeah, it's always better when we're together.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Let's go back here to that daily NQ NASDAQ futures chart out here. So yesterday we did have a bearish engulfing candle as price had moved up into the top of that rising price channel out there. Now, support is going to be these old reversal signals, these old bearish reversal signals. We had the Three River Evening Star pattern that set up a resistance level at 31.40.25, that's the high of August the 5th. Had a little bearish engulfing candle on August the 14th. That said that resistance would be the prior session because that was the higher high. August 13th, that's at 31.48. So there's your range of resistance. It looks like a shooting star, smells like a shooting star. Not exactly, but we'll call it a shooting star there on August the 26th. That high is 31.47. So the area of resistance was pretty well established inside these 2 little black lines out here. So that now becomes support. But if we do see a close below 31.40.25, well, really what it says is look out below. In this case here, the look out below, well, first it would have to get back into the May 22nd level. That is at 30.53. If it creams through that, you can expect that the bottom of the rising price channel, in fact, will be tested out there. So it's important for us to be able to get information from strength, just as it is from weakness. Now, if we go take a look at the daily chart for the Russell 2000, the second strongest dog in the pack out here, well, Let's go ahead and get rid of some of the lines out here on my screen because we can always put those back up there. We got some reversal signals yesterday. Actually, we had a reversal signal right out here. Yesterday looked like what we were going to see was a real breakout inside the market, inside the Russell 2000. Had every opportunity. So you had this little bear sash candle right here on August the 6th. That set up resistance, being the top of the August 5th area, which was 1062. Price got over that level, but then it just simply continued to sell off. And what it did was this is a shooting star out here inside the Russell 2000. So in an area here where we already had a resistance level, what the market actually did yesterday was it got up and it tested that resistance level, and that is with another reversal candle, shooting star. That is the cousin of the hammer candle, which we see at the low. You know that is one of Stevie's favorite candles out there. Well, guess what? That's Stevie's favorite bullish candle, shooting star, especially when it comes up against resistance. Well, that could be one of Stevie's favorite reversal candles out there, so we have to be paying attention to that. And we had an evening star formation that took place right out here. These three trading sessions, September 10th, September the 11th, and September the 12th. So the bulls and the bears, this is the most transparent marketplace that you could ever possibly have. The bulls and the bears, they just simply cannot hide. All you want to do is learn how to read the message of the markets. It'll make life so easy for you. It'll be your triptych to your money machine, to your bank out here. It's one of the pieces of the triptych out here. So we know, and this is why it's easy for me to sit on the sidelines now and say, you know what, all the signs are out here that we know where the bears are camped out. We know where they are when we take a look at the NASDAQ futures, when we take a look at the Russell 2000 futures out here, and all that to get bullish, all you need to see is a close above those areas because old resistance will become new support. But right now, the bears are defending their territory, and they're doing it very, very well. Now, what are we going to find here from the weakness? Well, weakness used to be, or has been, the Dow futures. If we go take a look at the Dow futures, the YM rate out here, we're going to see that actually there is no weakness in sight here just yet. In fact, here's where we get some conflicting signals, and the conflicting signals because price broke back into that rising price channel. Again, the same rising price channel coming off the November 16th area. And inside the Dow futures, that really is very close to a shooting star candle formation. But you know what? That body, or the wick, is really not twice the size of that body. So guess what? It doesn't really qualify. So it's not a reversal signal. And in fact, it's really more of a bullish candle because of the gap up that we had. So on in what used to be the weak cans out here, that's why it's going to be important for us to be paying attention to this chart as well, because that has now become the strength. So we got the gap up. That's strong. You're back inside the rising price channel. If we take a look at retracement levels off of the high from August the 2nd down to the low that was put in on August 28th, you can see that you're really right at the 0.786 retracement level. So what the Dow futures have done, that the Dow index hasn't done, is what the Dow futures did do yesterday was they tested the August 2nd swing point. They did it by testing low, which was 15,496. They closed below it, so they rejected the Dow. They rejected that swing point. But we take a look at the diamonds, we take a look at the volume out there. They suggest, because it was moving into the swing point with volume, they suggest another test of that area. But folks, I can tell you, the caution signs, the yield signs, they're out in the marketplace, and you ought to yield to them. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow up 39 points, trade out at 15,534. S&P at 1,700, up 276. The composite up 8, trade out at 37.25. Russell 2,000 up 28 cents at 10.56. Big mover in the market this morning is Microsoft doing a $40 billion buyback. I guess they can't find anything good to do with their cash out there. Up 45 cents. That's up 1 4/10%. Apple up $1.50 right now. That's up about 0.3%. Google up $2.46. Intel up a nice 45 cents. We haven't looked at the Intel chart lately, so remind me to do that, would you? We'll take a look at Intel. To the upside here, you've got Kithera Biopharma up $9 this morning, up 26%. Let's go see if there's some news behind this. KYTH is the ticker symbol out there. See if we can find something behind this move out here. Gets a facelift. Yeah, I don't think that's the facelift. Let's see. Rose 40% to Let me try to find this news article out here, see what is behind this. Extended trade on Monday after the company announced 2 Phase 3 trials of its drug candidate ATX-101 for the reduction of unwanted fat under the chin. Demonstrated, so they are getting a facelift. How about that? So that was not just a play on words. So that's up a nice 26%. You've also got RPRX, Repros Therapeutics. That's up a nice 29% out here. Looks like they've got some preliminary findings. Let's see, Androxol meets both co-primary endpoints and secondary pivotal study out there. Pivotal study for what? Let's see here. What the heck does this thing cure? Let's see here. Top line results. I'm not going to read through this whole thing. We're just going to take a look at the stock chart maybe a little bit later on. Safeway Inc., that's up $2.60. Apple up about $3 right now. Sohu up $2. FedEx, FDX are up $1.68. Aeropostale up $1.39. 3D System, Triple D, up 180. To the downside, Outer Wall, OUTR, is the ticker symbol there, down 16% here this morning. I believe Outer Wall, I think that is Redbox out there, so they are taking it in the shorts. Goro, G-O-R-O, Gold Resource Corp, they're down 20% out there. More, and they are getting hammered. Tesla off about $2 right now. Amgen is off $1.12. Green Plains Renewable, GPRE, off $1.24. Mosaic off 87 cents, trading out at 44.67. Again, our call number 877-927-6648. Let's go. We'll peek in. I've got the Dow chart up on my screen, so let's go have the diamonds chart up on my screen here. So as we take a look at what the diamonds did, then we'll go take a look at some of these stocks here, popping and dropping. You know, I said we look at Intel, didn't I? So we're going to do that. I'm a man of my word. Now, if we take a look at the August 2nd swing point out here, that's the August 2nd swing point high inside the diamonds. It had 3.6 million shares. Yesterday, the diamonds got into it with 6.7 million shares. You know, we were taking a look at the 9 o'clock show, 10 o'clock show. We saw that the volume was pushing into those swing points. It said that price should be back up there, and that's what we've seen here today. So yesterday inside the diamonds, a rejection of price, but not on volume. So we're seeing another test of that today. We won't pay attention to the volume at the moment here, but we certainly will before we go off of the air at 11 o'clock this morning. But the volume for that swing point for August 2nd is 3.6 million shares out there. You get to close below that on lighter volume, then you'd have a rejection on both price and volume today. And, hard to believe we'll see a whole lot of volume, probably more like a sideways move by the time it's all said and done out here as people await the news conference by Ben Bernanke sometime tomorrow around the 1 o'clock time frame. Let's go take a look at some of these stocks here that are popping and dropping. So let's go take a look at Intel. INTC is the ticker symbol. I want to see what this is moving into. I don't know if it's in my core group here. If not, it should be or should have been. It's not. We'll go ahead and put it in and take a look at the stock chart. Intel right now this morning, it's trading off so far intraday high out here. Let's see what it's moving into. Oh, it's moving into a gap. It's moving into a breakdown area. So that's Intel. Looks like in order to complete the closing of the gap, it would need. Now the gap we're looking at, folks, is from July 17th. The July 17th low is 24.04. So far, the high out here is 23.89. So it's running into resistance. Let's take a look at the volume as it moves up into that area. In the case of Intel, broke down on July 18th with 77.8 million shares. Got into that gap yesterday. Looks like rejected it yesterday. So if we take a look at, we're going to go ahead and put a black line and a red line, not to be confused with the other red lines that some of our folks in the talk about in the government. The red lines, we're looking at our support and resistance. In this case here, we're going to use two different resistance lines. One's going to be red, one's going to be black. So the ultimate resistance really being the area where Intel broke down from, which was July 17, 24.04. What we can see here yesterday was a failure In the bottom of the gap level, that would be the high of July 18th, 23.61 against 77 million shares. You can see yesterday that area was approached with half of the volume, less than half of the volume, as it did 30 million shares out there. So a real reversal of fortune in the case of Intel will be, because right now it's inside that gap, will be a test of 24.04 and a close back below it. And if it does it on less than 44 million shares, there's your ultimate in reversal signals of a resistance area, because it now would be coming into the area where it had broken down. Remember, the real benchmark volume is 77.8 million shares, but if it can test on less than 44 million shares, and no reason to think that it won't, because yesterday it was pushing up, and with the market pushing up, it only had 30 million shares. So looks to me, at least at this stage, that it doesn't have the gas, and all that it's doing is it's going to fill the gap and come back into a breakdown area. We buy breakouts, we sell a breakdown. So that is inside of Intel. Not saying necessarily to go ahead and sell Intel, but you can also see as it's doing this, as it's coming back into the area where it broke down from, it's also getting into what? It's getting up towards that overbought territory of that relative strength indicator. So it's got a number of, as I said, there's a number of reasons to be very concerned. The market knows ahead of time. And right now, the signals from the market are that they're not going to respond well to whatever it is that Uncle Ben has to say tomorrow out here. So those are the signals, and quite frankly, it's why I'm just sitting on the sideline here. No reason to have your money at risk when you don't need to have your money at risk here. There's plenty of trades, and but I can't tell you ahead of time, the signals here are not looking that great out there. So that's on Intel. We wanted to go ahead and also take a look at Microsoft. Let's go see what Microsoft is doing other than going ahead and spending a fortune buying back stock. Let's go see where that is at. I believe Microsoft is inside this little core group of stocks out here. There it is, MSFT. So that's trading out right now at $33.28. And Steve Ballmer, I guess we can say that Larry Summers knows how Steve Ballmer feels, because yesterday we had the Summers rally, of course, and that was because he took his name out of the ring. And of course, Steve Ballmer, he gave forth to the rally on August 23rd when he announced his retirement, and the market went ahead and applauded that. Of course, the market went ahead and pulled all the way back into that area. We can see here Microsoft really, after announcing a $40 billion buyback, the market is not exactly too excited about that deal. It's really, although it's, you could say it gapped up a little bit, it's still gapped up from the standpoint of where it closed yesterday. The close was at 32.80, and the open today was at 33.42. It's just traveling with inside this candle out here. So not a whole lot of excitement in the news here in Microsoft and its $40 billion buyback out here. Not exactly a sign of a celebration as we take a look at that stock. Let's go take a look at some of these other guys that are popping and dropping here. KYTH, that is the leader in the clubhouse percentage-wise, dollar-wise, up $8.72. So this thing is gapping. Let's go see what it is. I'm sure it's gapping. KYTH. Let's go see what it's trading into, maybe all-time highs. Look at the volume inside this little booger. Let's go take a look at this. I'm going to pull. Oh, yeah. How about this? So this is interesting. Now, this is a nice-looking IPO, isn't it? Take a look at this, folks. October 11th, 2012, debuts somewhere between the price range of $18.49 to $20.59. Closes at $19.79. It's up at $42. So that is a nice move out here, and it's got some nice volume behind this. No idea where this thing is headed to, and no reason to step in front of it. But it's not a bad-looking stock chart, with the exception of that huge gap out there. Let's take a look at the other one, RPRX. RPRX is the ticker symbol. So let's go see. This is also up nicely today, up $5.73. RPRX is the ticker symbol. Let me see if RPRX... also gapping up this morning. Let's see if this is also at all-time highs out here. No, it is not. So this stock chart here does not look anywhere near as nice as the previous one. If we take a look at this on a monthly basis, this thing at one stage back in June of 2007 was up at $60.36. How about this, folks? Goes from $60.36, that's the high, June of 2007, all the way down to a low in November of 2010 to $1.11. How's that for a psycho stock? How's that for a haircut out there? That's an ouch. Now, of course, if you're holding it at $1, and you came in November, good for you, because right now it's at $26. So that's a nice 26-to-1 return on your investment. In any event, let's go take a look at some of these other stocks out here. How about Outer Wall, OUTR? I believe that is a red box out there. Let's take a look at this. This move down here this morning, now 14%. See what it is going to trade into. OUTR, again, is the ticker symbol. So gapping down this morning. It has some good volume, taking out swing points galore out here. Let's see where this thing is traveling all the way back into. So volume so far out of this, 1.3 million shares. It's trading inside this little swing point, this high volume low from February the 8th. That had 4.3 million shares, but more likely what this is going to do is come all the way back to the October 26th high volume low, which has not been tested. So maybe it takes a little while to get down there, but it should go visit $40.50 out there, and that is on Outer Wall, OUTR is the ticker symbol. Let me go over into the ETF structures here. We'll go take a look at the daily charts, because this is something that you're going to want to be watching tomorrow, Wednesday, tomorrow or Thursday for sure out here. Where are they? I've probably gone too far. ETF. Where's the spiders out here? Good Lord, I've got enough tabs to make you go batty, huh? You guys don't want to see all my buy lists or anything, do you? No. But let's go find where God's Spider. Here we go. Spider. SPDR sitting there right in front of me. Why do we want to be paying attention to these? Well, let's take a look at the, I mentioned yesterday, the XLV, which is the health sector, which I believe is a second weighting structure inside of the S&P 500. And what is one of the reasons? If I go ahead and open this chart out here, go ahead, chime in. I can hear you. What do you think are one of the reasons why I want to be paying attention to this stock chart right here? What would you think would be a good reason to be paying attention to the XLV, the second weighting inside of the S&P 500? Yeah, you are exactly right. Take a look at what it did yesterday. A nice little gap up yesterday, formed a doji candle. So now the gap up, that's nice. Now the mere fact that it's a doji, remember you want to go ahead and take a look at the prior day's close, and you want to fill that in. So it was a nice looking bar itself, but what do we got out here? In fact, if I go and put this on the weekly chart, what are we going to notice about this? We're going to notice that this is at all-time highs out here. This is the XLV, right? So why do we want to pay attention? I'm going to go back here and put it to the daily chart. Why are we going to be paying attention to this? Well, right now, today, it's obviously because of yesterday's candle. It's forming a bearish engulfing candle. However, don't get fooled by that bearish engulfing candle, at least not just yet. Not so fast. Not so fast. Why is that? Because if you really just took a look at that as being a bearish engulfing candle and you didn't account for the gap there, you would be doing yourself a disservice out there. You would totally be doing yourself a disservice. But the reason that we want to pay attention to this is because any gap down, let's assume that all that the XLV does is just kind of travels sideways here, maybe moves a little bit higher, but it does not close the gap. Out here, if you get the XLV, the second weighting inside the S&P 500, and we get a gap down, could be tomorrow, maybe it's on Thursday, who knows when it actually is. But right now, what we know that we do have out here is we've got an open gap, the high of September 13th, 51.28, and the low of yesterday's trading session right now at 51.53. And if the XLV, the second weighting inside the S&P 500, does create a gap down with that open gap out there, that would be an island reversal at all-time highs, the most bearish reversal signal that one can get at all-time highs. That's the reason that Stevie Sam is paying attention to the XLV, and you should as well, because we're going to get some nice signals out here. Now, how about some other sectors inside the S&P 500? Now, not one of your top weighting sectors in here, but let's take a look at the industrial sector, the XLI. So we take a look at the industrial sector. What are we going to have here? Maybe today we're going to get two dojis out here and then a reversal? Let's take a look at this. Let me put this on a weekly chart. Oh, look at that. You're also at all-time highs out here. Very important, very importante for us to be paying attention. And then guess what, folks? There's some other sectors inside the S&P 500 that have the same patterns out there. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow is up 54 points. S&P is up 5, trading out at 1703. Russell 2000 up a $1.40. And let's go check in on some of the markets around the globe here. We've got the Shanghai up on my screen. Now, the Shanghai went all the way from the high back here on February 18, 2013. Went from a high of 25.58 all the way down to that beautiful hammer candle on June 25th out there. Really nice hammer candle. You can see the reversal in the market. Now, what we can also see, because we've got the relative strength indicator, in this case here, relative weakness indicator. Take a look at that hammer candle that formed coming out of that extreme, I do mean extreme, oversold condition. Now, what we have seen form out here, take a look at the Shanghai. You don't think that this thing stretches the rubber band, do you? This thing goes from an extreme. Take a look at the RSI reading. Let's see, how low did it get? This is the 14 period. It gets down to, not lowest that I've ever seen, but gets down to about, 15.56. Does that on the trading session of June the 26th out here. Goes from that level, goes into the extreme overbought territory. Remember, folks, make sure you put this on your stock charts when you are paying attention, when you are buying something, because when you want to do is you want to be buying when your relative strength indicator is down towards its low threshold area, somewhere in that 30 level range. So now what this is actually setting up for us is, because we've had one heck of a nice move, not only did you get that nice hammer candle? This thing has made a little bit over 0.68 retracement from high to low out there. It's in a nice rising price trend channel that is out here, and as it's pulling back, we're going to watch the pullback, because it gave us the indication it wanted to pull back, right? Just take a look at how overbought this thing gets, up to a level of about 80.11 out there. So it was pushing the extreme, and now it's going ahead and pulling back. So let's see what happens. We'll go ahead and we'll keep this rising price channel on my screen here, because we want to buy the Shanghai unless somehow we start to see some volume, we start to see something pull out of this thing. We'd like to be able to buy the next pullback. And the next pullback that we want to be really paying attention to is as price comes into the bottom of this rising price channel. And we want to see this relative strength indicator here get below the 50 session. Lower, the better out here. Then take a look at some kind of bullish candle. If we take a look at retracements inside the Shanghai, let's go from the most recent swing point low to the most recent swing point high. That would be August 23rd's low, all the way up to the high that was put in here on September the 12th. And you'll see sweet 618 at 2220, room 222 with a 0 out there. That is what we want to be paying attention to as a potential buy point area inside the Shanghai. But it looks to me like we want to be all over that. Also at that 2220 level, what we will see is that is where the Shanghai also most recently broke out from, which was the September 6th level, which was 2218. So that's going to be our target zone for the Shanghai. We'll do this one together. We'll keep paying attention to that. We'll make this one a radio show trade out here, and because that could be setting up a very, very nice move, and that is on the Shanghai. Inside the FTSE out here over in the UK, we see that it broke its rising price channel yesterday and has done what it's supposed to do, which is come back and test it. And it's already done that in one day. Trading session is still early. The FTSE here does not close until about, I believe it's 11:30. If it can stay out of this rising, or if it can continue above this descending price channel out here, this might in fact be a real break. But one test does not, in fact, how about that? One test is not. We want to see more like 2-3 tests out there, and that is in the FTSE. Folks, it is Terrific Tuesday. If you're off to start your day, I want you to have a great day, and always remember, you have an amazing power within yourself. That power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great morning. Look forward to seeing you soon. Take care now.
It's always better when we're together.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely quickly identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move, it's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the ultimate money machine. All the details on the front page of TFNN.com.